Good morning, Wall Street winners. It is Wednesday, March 19th, and we're coming off a bit of a rocky day yesterday. We had another down day, another red day in the markets. We had a sea of red, and some markets down, obviously, a lot worse than others. If we look at what's going on in the news, we've got continuing talks now on potential for resolving or ending the war in the Ukraine after Trump and Putin had a conversation. The Turkish markets nosedived after the president, his main rival, was detained. And today in the U.S. at 2 o'clock, we are going to hear from the Federal Reserve about interest rates. And that's going to be the big market mover of the day. Now, it's not anticipated that they're going to move rates. So if there is any movement up or down, it will definitely create some volatility within the market itself. But we're going to hear from Jerome Powell at 2:30, and it will be interesting to hear what he believes is the state of the U.S. economy. And if we look at the futures, these must be off because I'm seeing red on the screen in the Yahoo Finance app. But either way, I was going to say everything is red, but I'm mistaken. It is now green, and it is positive this morning. So we're seeing a bit of a positive start, but don't be fooled here. This could easily go by the wayside. One of the things that has not happened this week, let's flip over to the Yahoo Finance app. One of the things that has not happened this week is we had the CEO of NVIDIA speak yesterday at their global technology conference in Silicon Valley, and he talked a great deal about very technical items. From what I understand, I didn't hear the speech, and changes that they're making and positive improvements and gains in AI and the whole space. But it wasn't the name-dropping session that we'd heard in past years about customer acquisition and AI growth. And that's not a bad thing. It's just a different slant on the message and maybe to a different audience. But we didn't see a move up in NVIDIA or NVDL, the ETF, from it doesn't matter, but we didn't see the move up in either one of those. And that is a surprise to me. I thought there would have been a bit more hype on that based on just the need for some positive information in the market these days. If we take a look at the top of the screen, we've got crude down but climbing back, so it's down 7 cents. But it is below $67 a barrel. Crude started off positive yesterday, and then not crude itself, but the oil refining stock started off very positive yesterday with crude up, and then they ended up in a lot of cases down for the day. We take a look at the NASDAQ futures. They're up 65 points, so that's not bad, but I think they were down in the 300 range yesterday. And then the VIX is down at 21.59, so it's in an acceptable range, but still a very risky time. I would think the VIX would be up higher for 30 days out, because 30 days out would take into account the potential for tariffs to kick in and start on April 2nd as anticipated. If we look at health and retail, it got beat up yesterday across the board. We have a little bit of positivity in the pre-market on Costco and Lululemon. Lululemon was just downgraded by one of the analysts that follow it, saying that it's setting a new high on that in the low 400s as opposed to what was higher. So it reduced its one-year target on Lululemon just because of all the uncertainty and what's going on. Healthcare had a positive day yesterday, but it's a bit of a mixed bag in the morning session. Get into transport, they're still getting slammed. This is one to stay away from for sure at this point. And then we get into oil and energy. We can see that from an energy perspective, yesterday Vistra had an off day, but Consolidated Edison was up slightly. Now, it was off for most of the day, but then climbed at the end 19 cents. And yet, up today is Vistra in the positive in the pre-market, and down is Consolidated Edison. You can see the trajectory here of a lot of these yesterday was positive, and then it dipped off, with the exception of Chevron, which was up $2 yesterday. But the majority of them were down for the day. We get into technology. It was just a bloodbath yesterday, red across the screen. But it looks like that's climbing back a little bit. I mean, if the NASDAQ's up 60-ish points, it's not going to be in the multiple dollars here. It's going to be in the pennies or cents. But you can see there are some that are having positive upward movement, but the majority of this is lower. We have seen the QQQ yesterday. So one of the things that I've mentioned on the channel recently is one of the ways to guard against a correction, and I have a hard time doing this, is to bet against the market. But when it's going down and the narrative is that we're potentially headed into recession, it tends to continue to go down. You can't fight the momentum. So you have to join the momentum. And one way to do that is to buy put options. So I've been buying put options on 1 and 2 week expiry. So on a Monday or Tuesday, I'd buy them on the Friday or a week Friday out on the QQQ. That's what I've been doing. And I bought a few yesterday, not yesterday, I sold yesterday. I bought them one on Monday and then one on Friday. And when the market was up. So when the market went up, and I bought, and the QQQ was around 480. I bought a put for 1 and 2 weeks out for 480, thinking that it would drop and correct again. And sure enough, it did. I sold those yesterday. It was a very profitable day. And that's how I've been able to play some of this market from the downside and on the correction. So that's one way to do that. Options are a little more risky. The percentage gains on them are usually much greater than on an equity position or a stock position. I mean, I think yesterday in the course of a day or two, the return I made was 48%. So it was an insane percentage gain, but it wasn't on as much money that I would put into equities. So you're also using less money. So that's another, I guess, benefit if you want to look at it that way. Looking down further to the different stocks and what they're doing, one of the ones that took a big hit yesterday that I actually bought a call option on, which I'm not doing very often these days, is Meta. And it was down $22 yesterday. Just a horrific day. Tesla was off as well. Looks like it's in for a bit of a bounce and had a bounce the other day, but I think it's going to continue to drop based on the negative market sentiment and all the news around the protests at different Tesla dealerships, lighting Teslas on fire. I mean, it's a terrible thing to see when you're lighting someone's car on fire. Hopefully the person's not in it, but because you just hate what Elon's doing so much and you hate the brand, there's so much negativity around this brand right now. And I'm not advocating for that at all, but just from a stock perspective, I think there's only one direction that this stock can go in, and that is down. The interesting thing today, though, was this morning, Cantor Fitzgerald, which is the firm that Howard Lutnick came from, who is now the Commerce Secretary, they came out with a new upside an upside rating on Tesla this morning, saying that they feel it's time to buy. So not sure whether that's kind of insider information in that space, but with Howard Lutnick having come from there and Cantor releasing the analyst upgrade, it does seem very coincidental, especially after the White House was pitching Teslas the other day. Anyway, just a data point for you to consider. We've got NVIDIA up slightly today, but down still in the low 1 teens. I mean, I think this is an incredible buy right now. If you look at NVIDIA and look at the price to earnings, I know 39 times is high, but for a tech stock with this much growth, it's exactly the range, if not the low end of the range, that these stocks like Google and Microsoft and Amazon traded in when they were moving at the same kind of pace of growth. So it's something to consider there for the long run. Certainly, it's a great entry point for a 1 or 2 year hold for sure. And Google as well. I mean, down at 163, call it. This is just insane. This is, again, a 20 times price to earnings ratio. the stock pays a dividend, albeit it's a small dividend, but it's got so much opportunity ahead of it. It just bought Wix yesterday for security. I don't know. I think there's a lot of opportunity there. And then we get into financials. And I think in financials, we're going to see some of these make some moves to the upside when earnings comes around in mid-April. And I'm looking at the big ones to start because they will kind of tell the tale of what's going to happen for the rest of the banks. So looking at JP Morgan at in the 235 range there, Goldman in the 550, and Morgan Stanley in the 118. I think the most attractive right now is Morgan Stanley from a price perspective, but I think from a potential perspective, it's probably Goldman and JP Morgan. Those would be the two. I'm waiting for JP Morgan to see whether it drops any more. If it drops down into the 535 range, I mean, this is a stock that before earnings in January, I believe it was in the a few days before or a week before was in the 570 range, jumped to 590, and then it jumped up into the 600, 610 range, and then continued on up to, say, 670 for the next almost 30 days after earnings. Like, it just climbed incredibly. So that is one that I'm definitely keeping my eye on. That's where we are today. 2 o'clock, the Fed comes out. We'll see what they have to say with U.S. interest rates. Good luck in your trades, and if you're liking the videos, please hit the like